We have so much more good Tesla stock news today. Dan Ives says Tesla stock is about to go to $400 per share in his bull case, and his base case has now been increased to $300 per share. Tesla AI story could be worth $1 trillion and is the most undervalued AI name in our view, and I believe Dan Ives is right. And people buying Tesla stock today obviously also see a lot of potential in Tesla stock. Canaccord Genuity just increased their Tesla stock target to $254 per share, and Bank of America increased their Tesla stock price target by $40 to $260 per share. We are even seeing Tesla bears raising their Tesla stock price targets. For example, Guggenheim raised their Tesla stock price target to $134, up from $126. This guy is not a great analyst, so I would just ignore this bear. And here you can see all of the updates from everyone. I paid $300 to see this. Surprisingly, most analysts just reiterated their previous ratings without doing anything to raise price targets. Did they seriously not see what just happened to Tesla's energy business? It just grew 132% quarter over quarter, but people are buying more Tesla stock. It's up this morning. They are clearly seeing what's happening, and it's good. And yesterday, the trading volume was actually really high, and AJ, he warns everyone when there is a rally without volumes. You can run a statistical analysis which will show you that rallies on weak volumes quickly fizzle out. But this latest Tesla rally is backed by huge volumes. And here you can see that on a slower day, Tesla will trade 50 million shares. Above 72 million, that's a pretty strong day. And yesterday we had 200 million shares. Today, when I'm recording, already we are at 136 million shares almost traded. That's some seriously crazy high volume. This is an indication that the people that are buying Tesla stock, they are believing in Tesla stock long term. Because you probably have institutions buying, regular people buying that maybe don't really trade stocks but buy and hold. And now they are looking at new Tesla's fundamentals and like, whoa, I'm getting this energy business, and the next year they are going to build another factory in China to expand this energy business further. Let me get some of that, is what a lot of these people are saying, I believe. We believe the Tesla demand story has made a significant turn for the positive heading into the second half of 2025. That Ice, though, is catching some flack. So brave to upgrade the stock $25 after it trades up $22 on the day. But let's not forget that Dan Ice was saying buy Tesla stock at $142, while some of the analysts were starting to get scared and uncomfortable. He didn't change to hold, he didn't change to sell, he just said buy. He hasn't really made any major blunders calling Tesla stock. He did say buy Tesla stock as early as 2018 and then hold, so as long as you bought a lot and you never sold, you made quite a bit of money. Unlike, for example, with Morgan Stanley, where, you would have bought some Tesla stock, but then you would have sold right before the big rally. I mean, he quickly changed from sell to hold, but if you sold everything, you're holding nothing. Anyway, today we Tesla bulls are celebrating the stock being up. People are gonna like this video and they are going to subscribe. So I'm pretty happy about that. Just keep in mind that videos on this channel later will be political. All the Tesla videos will be back on the Tesla channel. Dan Ives, though, is getting criticized for being predictable. He raises his price target because the stock spiked. The next day, he will bring it down to $350 because the stock dropped 5%. He's being told to stick to one price target per year instead of dancing around. But Dan Ives is a Wall Street guy, and you have to be in the news if you want to promote your institution. One of the best ways to do that is to sort of feel the sentiment and based on that, change your price target. He does manage quite a bit of money, and he's doing exactly what he needs to do to promote himself. Dan Ives also takes sentiment into account when changing his price target, so it's not just based completely on fundamentals alone. I personally just got excited about the energy business, and also the deliveries were nice, but the energy business, that's a major surprise. However, there's clearly a sentiment shift as well. Is this a temporary thing, or is this a long-term shift? We will find out in a month or two probably. I can guarantee you this about Tesla stock: it doesn't stay flat, that it either goes up or down, so expect either further movement up or we're gonna go down a bit from here. Before I realized that technical analysis is just stock astrology, I paid a lot of attention to it. This was many years ago. And looking at this, I can clearly see that we just broke through. This is breaking the previous bearish trend. Before, we just couldn't break through this line, but we just did. So a lot of these stock astrology people are actually buying Tesla stock, making Tesla stock go up even further. When Tesla stock was down, Cathie Wood was buying Tesla stock relentlessly. And generally, she tries to not have more than 10% of her whole portfolio in Tesla stock. And if she didn't trim the position just now, today it would have already been 14%. So it had to be done in their case. Technically, their prospectus allows them to own more than 10%, but they cannot buy more once it's over 10%. And generally, they have an internal rule. If it's over 10%, sell. If it's below 10% and we like the stock, buy more. Which is unfortunate because if they didn't have this rule internally, they would have made a lot of money. So all of that is really self-imposed because you look at Ron Barron, multi-billionaire, and he has multiple funds, but in this particular fund, 27% of it is in Tesla. That's why the guy is so rich. He didn't sell Tesla stock, he just let it run. So when Tesla stock reaches new all-time highs, I will be keeping my Tesla stock. By the way, just to be clear, I think Cathie Wood's research about Tesla is really good. I'm just saying, when you know you got something really good, hold it. But the cove that we are seeing right now from the bear side is reminiscent of the 2021 bull run. Delivery numbers are too good, so therefore it must be fraud. Anyone short Tesla needs to have their head examined. Gary Black is being a bit savage here, but he's right. They should get their heads checked. The EV business is a great business. You get 15% adoption today, which is going to much higher in the next 5 to 10, 15 years. Tesla will launch the cheaper EV, $25,000. And as we have seen pretty much with every category that Tesla first enters, Tesla just dominates it initially. And Tesla wants to be a mass market brand, and that $25,000 vehicle will be a mass market product, unlike the Model S or the Model X, which are really luxurious vehicles and not really mass market vehicles. And Gary is seriously surprising me here. Tesla will solve generalized autonomy first, worth potentially $5 trillion. He's not criticizing Tesla for its choices and strategies. He's just saying, yeah, this could happen. I haven't really seen Gary Black talk like this before, so this could be a further sentiment shift when it comes to institutions on Wall Street. Tesla will use all its learnings from Robotaxi to launch Optimus robots, which could by itself be worth $20 to $25 trillion in market cap. Wow, Gary Black is not pushing at all against what Elon Musk is planning to do. This feels quite different from the Gary Black that we have seen in June, and I'm loving it. On June 14th, Gary Black had a Tesla stock price target of $200 for the next 6 to 12 months. But this kind of talk is making me think that Gary Black is about to increase his Tesla stock price target big time. But I don't think this is making complete sense. Professional money managers keep asking, why is Tesla stock ripping higher? I keep reiterating what I've said here. EV fundamentals matter most. Tesla barely beat the delivery consensus, although Tesla beat Troy's estimate big time. I am seriously surprised. How come Gary is not even mentioning the energy business in this post about why Tesla stock is higher? Gary Black's opinions often give us a really good look into what Wall Street is thinking, so him not even mentioning the energy business is telling me further, yeah, Wall Street is still ignoring Tesla's energy business. And when they stop ignoring it, what do you think is going to happen to Tesla stock? Gary's defending himself here. Just to set the record straight, we didn't panic sell Tesla stock at the bottom. We started trimming our Tesla position in September, about 2 years ago, at $260 per share, when it was our largest position at 12.2%. We started trimming our position as analysts. Tesla EPS estimates started dropping as Tesla cut EV prices and got very little volume response. Our average selling price since September 2022 was $202. In other words, it would really suck to buy back at $244. In the meantime, in 2022 in August said, yeah, most likely actually it will drop further. That's when Tesla stock was at $300 per share. I didn't sell because I thought in the long term Tesla will figure out FSD and the stock will rally big time eventually. And when it dropped down to almost $100, I got really bullish and of course I was buying more. Is Ross Gerber going to become a big Tesla bull again? Well, he says Tesla stock got a nice rally as the low financing offers helped them beat lowered estimates. Tesla sold off inventory and cut production to help cash flow in the quarter. Not sure how margins will look, but is the worst behind Tesla? He sounds a bit like a bear. He does hold a little bit of Tesla stock, not that much anymore though, only a little bit. But there's still quite a bit of short interest in Tesla and a lot of them just got burned badly. Yesterday, Elon called out Bill Gates and indeed, shorting Tesla will make Bill Gates a millionaire. So the rumor that I shared earlier on Patreon, seemingly that rumor has some merit. Giga Shanghai seems to have planned a production schedule of 260,000 vehicles in Q3. If this turns out to be true, it is very curious. Domestic demand plus exports isn't supportive of 80,000 plus sales per month. 260,000 vehicles per quarter? That's more like 86,000 vehicles per month. So what is going on here? Higher demand? Unless they deliberately intend to build inventory ahead of Q4 because they expect some production downtime in Q4. So maybe some production downtime, but why would you have production downtime? If you are planning to introduce a new model in Q1 of 2025, that would really make sense because some of the production lines probably would be down. So you need to build up that inventory to get ready for that transition. So to me, this does sound bullish because that further reiterates that indeed Tesla is planning to work on a new model. I definitely see this as good news, but it doesn't seem likely that it's because of really increased demand, because you look at this and you see that Tesla China has changed delivery period of Model 3 and Model Y to 1 to 4 weeks down from 1 to 6 weeks, and Model Y 1 to 3 weeks now down from 1 to 6 weeks. So looking at the Model Y, you could have never gotten a Model Y this quickly before in China. Although partially it could be a strategy to make sure that all the delivery centers have at least a few Model Ys. So if someone does want a Model Y today, they can go walk into the store and walk out with a new car instead of having to wait for longer. And this could make sense because many people, especially if they are not that well off, they buy a car when the old one breaks down and it's maybe a bit of an emergency. You need a new car and you cannot really wait. Just as I predicted, Tesla extended the free FSD transfer offer until September 30th, which is the end of the quarter. Earlier, it was just until the end of August, which I looked at and said, yeah, I think they're extending it. And unless FSD improves quickly and a lot, I think we will see this again. Yesterday, by the way, was the biggest upside reaction for quarter deliveries in 10 quarters. It's been a while since Q4 of 2021, which was an incredible beat. The stock jumped 16.16%. Oh, and the 260,000 production number in China, that was actually the Q4 record of last year. So we know Tesla can definitely get to that number. AJ did some math and he calculated this incredible number from the energy business. How many more deliveries is it worth? If we measure this in terms of vehicles, it would be worth 99,000 incremental vehicle sales. So it's like Tesla delivering 543,000 vehicles. It's a big deal, people. Pay attention to Tesla's energy business. This is still an estimate, but Tesla's energy profits will no longer look super tiny compared to the auto business. Here in red, you can see how many deliveries we would have had if you just take the energy business and turn that into sort of like vehicle sales. These energy charts really do look astonishingly beautiful. This time, clearly, Troy's estimate was not that great. Taking this last estimate into account, is he still more accurate than Wall Street's consensus? If we look at the last 14 quarters, Troy has an error rate of 3.39%, which beats the Tesla compiled consensus, which is at 4.65%, the Bloomberg consensus, which is at 5.45%, 65%, and the fact set consensus. The actual deliveries are marked in this transparent sort of color, and then you can see Troy in green. You can pause and compare if you like to take a look for a bit longer. You can see that in Q1, the general consensus was way over optimistic, but Troy was also still too optimistic, but nowhere near as much, so he was more accurate. So overall, Troy is more accurate still than the analyst consensus. So why wasn't the estimate accurate? Was it the sales from Australia? No, the sales in Australia did not really surprise. Maybe very high sales in Germany? Definitely no. Since the incentives faded out, the sales have not recovered. We did have pretty good sales in South Korea though. Look at this. It's just beautiful. I can't see the Canadian sales yet, but it seems like the sales in the US really exceeded expectations. That's probably the main reason. Elon responded to this post: now that my Tesla on 12.4.2 drives 99% of the time, I would like a couple of features to get that last 1%. For me, the main thing is just making navigation much easier than what it is right now. Like fine-grained navigation at the beginning and the end of the trip. If I use the turn signal to adjust the lane, remember the conditions when I did that. Safety first, then the convenience features. Some of this stuff, like the rolling stop, is technically illegal, so needs to get us upset, but 99% of the people do it. Omar has a complaint about the new build. The combination of this new build, driving really slow and then stopping at every yellow light, is devastating to me. It is tearing my soul apart. It also seems like it is bound to cause an accident with someone getting rear-ended stopping that harshly for a yellow. In assertive mode, it should always try and cross when legal, like a human would. I'm sure Tesla can figure it out because they did it with 12.3.6. Stephen Mark Ryan posted this on March 24th, saying that his brain is too small to time the market. The stock is up 34% since he posted it. He says, I'm not smart. I'm just not dumb. Read that again. As I said, my brain is too small to time the market, so I don't try. I believe long term, Tesla will be worth way more than it is today, so I buy when I have spare money, not when I think I can time the market. Who else knows their brain is too small to time the market, so they don't try? Many people are liking this post. And by the way, interest rate cuts have not really even started. Tesla is double leveraged relative to upcoming rate cuts. Rate cuts are good for implied equity discount rates and high PE stocks like Tesla, and then people are able to easier afford vehicles that Tesla sells. We Canadians have already started cutting rates. Europe has also started, and the US is probably not that far away. For rate cuts to happen, we don't need a bad economy, we just need inflation to stop. Oh, we are getting some breadcrumbs in regards to V4 supercharging and the Cybertruck. Tesla will now tell you when your charging performance is limited by the charging station. You can see it here, charge rate limited by charging station. Charging at maximum rate available from charging station. So we will likely see some new V4 superchargers deployed soon. And here Omar posted another no interventions drive. Here's another one. Oh, Tesla just added YouTube music, Amazon Music, and parental controls, weather forecast, and air quality, navigate to sub destinations, and schedule charging and preconditioning. I like the YouTube music part because that's the app I use for my music. So being able to use it in my Tesla, that definitely makes my life better. Tesla China says production of the 4680 battery is ongoing and uninterrupted. Tesla China recently responded to rumors that it would stop producing cells if it failed to control costs before the end of the year. Just so people understand how far Tesla has come with the energy business, in 2018, Tesla deployed 1 gigawatt hour of energy storage during the whole year. And now, in just 90 days, Tesla deployed 9 times more in 1 quarter. And seems like people are getting it today. There are a few key things to understand about Tesla's mega packs. Number one is when you go to Tesla's website to order a mega pack, you will see a price for just 1 mega pack at about $1,040,000 for the 2-hour duration mega pack and $970,000 for the 4-hour duration mega pack. However, on average, Tesla's mega pack project size is 50+ plus mega pack. So when you grab pricing from the website, you need to enter 50 as the quantity. When you do that, you see that the 2-hour mega pack is actually priced at $950,000 and the 4-hour one at $900,000 each. So it's easy to use math that's a bit too aggressive. But Larry has a few good points. And by the way, he had a pretty good estimate among retail Tesla stock investors. His delivery estimate was pretty good this time. Number one, contract pricing almost never aligns with website pricing. Number two, most large contracts provide for fluctuations in raw material supply costs, but seldom recover all or even most of the difference. Revenue in Q2 of 2024 from the energy business represents contracts struck 1.2 or even 3 years prior. Number four, deferred income realization is independent of raw material and or current hardware pricing and is actual performance dependent. So for all these reasons, website pricing is a very poor guide of current revenue. To better understand the disconnect between contract price and battery costs, here is a historic perspective showing Tesla energy revenue per gigawatt hour delivered versus cost of LFP batteries. Yeah, you can see the battery costs all over the place, but the revenue per gigawatt hour, relatively speaking, stayed fairly consistent. So for now, we are likely to have good gross profits from the energy business before they come down a little bit. Polestar announced their deliveries. They did 13,000 EVs in Q2, down 18% year over year. In the meantime, BEV adoption in Denmark reached 50% for the second month in a row. Tesla, of course, was the best-selling brand with 33.6% of the BEV market. And typically the sales really pick up at the end of the year, so I'm really looking forward to that. The Model 3 and Y are the two best-selling cars over there of any kind year to date. That's it for this video. I just uploaded a new Patreon video. These are connected. Tesla's next move has just been revealed. I'll see you on Patreon or in tomorrow's video. This channel, by the way, later will be political, so make sure to subscribe if you want to see that stuff later. That's just temporary to get some momentum on this channel, and then all of the Tesla videos will be back on a Tesla channel. By joining Patreon, you will have access to all of my exclusive videos on Patreon, as well as how much I am willing to pay for each Tesla share between 2024 and 2033. If you join the investor tier, you will also have access to my valuation model, where you will see all of my assumptions, including deliveries, the energy business, Tesla's future businesses like FSD, and of course much more. And then if you want to easily download that and put in your own numbers, then this third tier is for you. To all of my Patreon supporters, thank you so much. Make sure to like the video and subscribe if you haven't yet as well. It's really important to like the videos because that makes it less likely that the channel will be shadow banned later, like my other big channel got shadow banned before from about 50% of my regular viewers. Thank you so much for watching, and I will see you in the next video.